Hello everyone, welcome to Fellowship of the Frugal. This is Daniel, and on today's video I'm going to give you a couple of ideas on how to get started with your credit. So let's say you're somebody, maybe you're young and you don't have any credit at all to look at, or at least for lenders to look at. How do you get started to where it gets you in the lending game so you can begin to get some loans on your own? So that's what this video is about. If you like it, be sure to subscribe, leave some comments and suggestions, and check out my other videos, and I'll be sure to get some more out. So I hope you enjoy. Alright, so you find yourself in a place where you need to get started with credit, and what do? How do you get your first loan? You're kind of in a catch-22 because lenders want to see that you have a history of being able to handle loans, and you want to get some history, but you can't establish it because they won't give it to you because you don't have any. So how do you get started? So that's where we're at today. So there's a couple of different ways that I'd recommend on getting started with that to get the ball rolling. The first way is to co-sign on a loan with somebody, probably a parent. I know this is how I personally got started. This is where I was going to buy a car. My dad was the primary person on the loan. I was added as a co-signer or co-applicant on the loan, and I was the one that was making the payments, and everything that was reported was going on my credit history. And this is what you want to do for yourself too. If you go this route, you can have a parent be the primary applicant and you can be the secondary or the co-applicant. So they're really relying on your parents' income, your parents' credit to make the loan, and then they're adding you onto it as somebody that also gets to have their credit reported and establish something of history that way. So with a co-applicant, with every signer and a co-signer, they're each obligated to the loan. So the lender, the reason that they're willing to do this, even though you as the co-applicant don't have any history at all to work with, is because they know that the parents are on the hook too, or whoever's doing the loan with you. Doesn't have to be a parent necessarily. That's just how I got started. But everybody on there is obligated to the loan. So if one person is not making the payments, they can get the other person to pay up, and everybody's in trouble if the loan defaults. So that's why this is an option that works. Now it's important, if you go this route, you want to make sure that you as a co-applicant, that your payment history on this loan is being reported to the credit bureaus. There are some instances where you can be added to a loan with somebody else, but only the primary applicant's information is reported to the credit agencies and the co-applicant is left off completely. Make sure before you go in and do this that everybody is being reported to the credit agencies. Otherwise, this is a waste of time if your goal is to establish your own credit history. So that's key. Make sure that you do that. Another way to get started with credit, and this is a way that I encourage all the time at my job and have for years, is to do a cash secured loan. This can be either a cash secured credit card or just a cash secured term loan. Either way is fine, but the way this works is you have cash in hand. We'll just say $500, since that's a very common minimum starting point with these types of loans. But you have $500, you deposit those dollars into an account, and then that account is then used as the collateral to loan you the credit card or the loan. So really, no credit history is required to do this, and it's easy to do because the bank or the lender knows that even if you default on the loan, they got the cash right there. So it's a very minimal risk to them, if any at all. And so these are very common ways to get started because the bank has the money, they lock it up, and if you don't make good on your loan, then the cash is theirs and they're not out anything. So that's the great way to get started. Now what I recommend, if you go the credit card route, is once you get it in the mail, then you do something to generate a statement. Now what does that mean? That just means a purchase. The dollar amount does not matter. It can be $5, it can be $50, it doesn't matter. Just buy something with it, in just the one thing, and then that's going to be enough to generate a statement to where the account's going to be looking for a payment due. And then when the account comes due, turn around and pay it in full, and do that every month. Do a small purchase, get the statement, make a payment in full. Next month, do a small purchase, get a statement, make the payment in full, and do that every month, month in and month out. So why do I say it like that? Because you have to generate a statement to begin having it reported on your credit. If you just get the line of credit and you're not doing anything with it, then it just shows as an open account, and that's it. But if you are making payments on it, and you're making those payments on time, month in and month out, that's the single biggest piece in your credit score, and how it's determined is your payment history. I have another video where I go into a little more detail on that. But you want to establish some type of payment history on this loan, and you want to pay it every month. And you want to make sure it is every month, because again, if you're trying to establish your credit, you're trying to do the most up front to get it started on the right foot. And also you want to make sure it is a small payment. Now, why do I say a small payment? Because if you max out your credit card, let's just say you have a $500 credit card that's available to you that is cash secured. If you max it out, you don't know when that balance is being reported on your credit to the agencies, whether it's all three or just one of them, like Equifax for example. You don't know when it's being reported, and if it's reported when you maxed out the balance, even if you turn around and pay it off in full every month, it actually shows you're a bad credit risk because of when it's being reported. So to minimize the risk of having that happen, you always keep the balance low. Always just make sure that the balance is low, so your credit utilization percentage is low, and then that way you don't have to worry about when exactly it's reported, because you're never in any danger of being above that 30%. That's a kind of a rule of thumb on how much of a percentage that you really don't want to go above for a line of credit anyway. And with a term loan, I mean, the terms are established up front, so you know exactly what your payment's going to be, when it's due, and those kinds of things. So as long as you pay those on time every month, you don't have to worry about late fees or things like that. And with a credit card, another reason I say paid in full is because it minimizes the interest that you're paying month in and month out. And if you do it right, you won't pay any interest at all. And so the only thing that it really costs you to do this is maybe some kind of an upfront fee just to get it. But just to have it month in and month out, you're not paying any interest, not paying any fees, hopefully, but you're also establishing some credit. If you do that for a good 6 months, it's a good rule of thumb. 6 months in, you should definitely have a favorable score that's tied in with your social security number. And you may at that point, now depending on the lender, but you may, especially after 12 months, be able to then get an unsecured loan of some kind, which is where that really gets you started off on that foot, where you can begin to get your own loans all on your own. So in order to get started, you want to get started on the right foot. I have come across a lot of customers in my line of work where they got started off very poorly, and so they're in recovery and catch-up mode for years and years and years. By the time they see me, they can't get a loan because their credit score is in the 500s or worse, and you're not going to be able to get an unsecured loan 9 times out of 10 if your score is not at least a 600 or above. So be sure to get started on that way, so that you are a good risk right off the bat, and that the credit or the lending agencies know that you're a good credit risk. Another thing that I would say about that is make sure that you are never 30 days late on the payment. Now, there is a little bit of confusion with this. If you're a few days late, that's not going to show up on your credit report. Now, you may get a late fee from the lender, but it's not going to show up as a late payment. It's still going to be an on-time payment, and if you pay it before it hits that 30-day late mark. Okay, I get a lot of questions around that, but you can be a few days late, but as best you can, just pay it on time. That way you don't have to worry about it, and you're minimizing the out-of-pocket expense to do it. So the last thing I'll say about this is you want to try to mix it up. So let's say you start out with one or the other. You start out with a credit card that's secured, or a secured term loan, and maybe you get started on the right foot, you're making payments. Try to do another secured loan, but the other type, a few months later. Why do I say that? Because again, on my video about what makes up your credit score, if you mix it up, that actually works favorably for you. So then not only are you mixing it up with different types of credit accounts, that's a good thing, and you're showing yourself as somebody who can handle credit and then pay their obligations on time. All those things are going to be favorable to you from the lending agencies. So those are the two main ways that I would recommend getting started: to be a co-signer with a loan with somebody else who has credit, and also to save up some cash, get a cash secured loan, and then use them as I said in this video. That's really going to help you out a lot. So I hope this helps. If you have any comments and feedback, be sure to leave those in the comment section, and I hope to see you again soon. Thanks a lot.